Hello, traders. It's 8 a.m. Chicago time on Wednesday, the 11th of November, 2020. It is Veterans Day here in the U.S. This is episode number 1877. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on across the board. Gold is the laggard today. Gold is off $20.80 or 1.11%. The euro's off. The yen is off and the pound is off. The leader today again is crude, picking up another 90 cents over yesterday's settlement, trading at 42.26 in the WTI December contract. The Nasdaq up 110 points or 0.95%. The S&P is gapping up 24.5 points from yesterday's settlement, 0.69%. The Dow's up 161. The Russell's up 8.2. Russell in very much new territory. Volume is lower. Thanks for the feedback. 1 second. Let me just make sure I have that right. Make sure the right microphone is selected. Yeah, looks like the right microphone is on. I'll turn up the gain on the microphone a little bit just to kind of get it better here. It doesn't look like I'm distorting at all. So it should be good now. Thanks for the feedback. We're opening up in a gap this morning, and that's where things stand. We do not have any major earnings today. Most of the news is relating to this Pfizer BioNTech news with the vaccine. The EU seals a deal with Pfizer BioNTech for supply of 300 million doses of COVID vaccine. The European Commission said it had sealed a deal with those companies for the supply. And then as far as the other markets, global share markets are higher. Optimism around COVID-19 vaccine offset concerns about the economic damage from surging infections. The U.S. reported another record number of cases. Yesterday, Japan's Nikkei jumped to close at a fresh 29-year peak. A strong dollar weighed on gold prices. Brent oil touched a more than 2-month high, supported by an industry report that showed U.S. crude inventories fell more than expected. So that's where we stand this morning coming in. In terms of economic releases, today, we've had Lagarde speaking, ECB's Lagarde as well as ECB's Guindos. There's really nothing else on the calendar for today, so we're going to just dive right in to the review segment. Again, the review segment is intended for accountability and kind of an understanding of what was expected versus what has happened. The primary scenario yesterday is an expectation of responsive buying back into the prior day's range, push into the prior day's range, look for settlement, look for it to hit settle, and then to fall out of range down to 3505. This is 3505 right here, this consolidation. This is the MC point of control. The MC point of control, and then I said it could move down below the 3,500 down to 3,490 before it pops higher. That was a primary scenario. Secondary, test down, find buyers, impulse up, and then start pushing up. And then the target then would be the prior day's point of control. Scenario 2 didn't happen. Scenario 1 was quite messy. Let me switch this to a 6-tick Renko so I don't have to explain what a point and figure chart is. It's confusing to some people. It's recomputing. It's a lot of data. There's the 6-tick Renko. So you can see here we pushed from the open, which it opened right below the prior day's range. We push right into the prior day's range. This is the low here, this green line. Dark green is the prior high or low, and it falls off. And then, so now we're looking for it to push through the 35.22 and then down into 35.05. Doesn't do that. Instead, it pushes to the high, puts in a weak double top here, and then breaks to the other side and ends up pushing to 0650, was it? I believe it was 0650. Yeah, 0650 instead of 05. Again, 05 is the MC point of control of last Friday and Thursday. Very balanced profile there. And then from there, it takes off and pushes the other side. It took out the low, the IB low, took out the IB high. And then it's here, it's just these crazy kind of these inexplicable moves where it just drops down, moves up, takes all of it back, consolidates, and so on. What I expected, given that there's an excess low here, a clear rejection of the low, if you're a Convergent member, we talked about this in yesterday's Trade Talk. I suggest you watch that video from yesterday's webinar. The expectation is that it is likely to extend higher towards 58 before the close yesterday. That was the higher probability play in my book, and it just did not accomplish that. It just kept going sideways and sideways and sideways. Overnight, dipped down. Overnight, it dipped down to 35.31. Right in here, it dipped down to 35.31 and has pushed to the overnight high, the current overnight high of 74.25. So that's where that stands. So to me, this looks like a short squeeze coming, as I talked about yesterday. It really this little push down was just a pullback. If you look at the bigger picture, this was just a dip down. Here's the 05. You see that pink point of control line right there, the high volume node of last week. It is by far the biggest volume area. And by the way, the point of control of this region is 60.75. And look at how last week it had this big volume area, and then the point of control of the next region is higher, and you can see it kind of circled around it. It's very methodical, even though we do have a lot of news coming in and stuff. The auction is relatively methodical. The problem with the ES right now is it's quite thin. It's double digit up in the depth, meaning it's 99 contracts or less per price. And many of you who've been trading a while will remember that the traditional bid ask in the S&P is around 250 to 400 contracts per price level. And so that's the impact of volatility. And so the S&P kind of runs through some areas sometimes, although of all the products that I monitor and trade, it is still the one that is more consistent with its auction because it's got the most eyes on it. So what happened yesterday? Yesterday we pushed down. We pushed down into the MC point of control. We popped higher. We left what seems like an excess low, and we are working ourselves back up. So we've gotta use Monday as the template day, the selling day as a template day. And if you recall from Monday, there was quite a bit of quite a low volume node zone. So let's look back at Monday. Here it is. So we're currently trading at 35.64. And so anything above that 58, remember I mentioned the 58 from yesterday is a key target into the close, expected the market to come into 58. Anything above here takes us all the way up the flagpole. 81 is the top of the single prints, and it is likely to run through this area quite easily. And so this is where we're headed. We're likely to squeeze the shorts from yesterday's action all the way through to into that 81 and ultimately to the 90. So that's where we stand today. The volume yesterday was very strong, 1.66 million contracts versus 1.1 to 900,000. So expect this squeeze to continue. This morning, volume's slightly higher than normal, 282 versus 190 or so. Double distribution profile. We spent a good portion of the morning inside of the prior day's range, tapering off at yesterday's high, and then the European session starts and buyers come in. We've been up here. The point of control is higher than VWAP at mid, and this high looks relatively weak. Tough call on this situation here. We just know that we've migrated value down. We may have triggered one-time framing down with yesterday's action, but we look to be reversing it today. So the market stands day to day is neutral. The market stance on the weekly is bullish still. So that's where we stand here. To me, this looks like it's got some fuel, and it looks like it's likely to carry to 90 above 35.90. Don't forget the all-time high at 35.76 and a quarter before Monday came along with the COVID vaccine news. We're right up against it in the overnight, and it's likely to take that out. So we are staging an attack from below, the key target being 35.98.75 above 3600. Okay, so a look at the bookmap, ctbookmap.pro is where you'll find the software. A look at bookmap says that more of the same. You could see a very clear upward skew in the price action, but overall the heat map shows a lot of just noisy areas. I mean, it takes only 100 contracts to generate one of these red lines, 100, 120 contracts. So you see these a lot of spikes here in the depth that stick around. These will likely trade out. I mean, we've been trading out a lot of these collision areas. We've been trading out. So, but the market depth is not really giving us very much in terms of what areas we could lean on using the order flow in the big picture. Still, order flow applies because every trade starts as a scalp. Again, every trade starts as a scalp. The order flow applies in the intraday action. Okay, so that's where we stand. Let's take a look at what we are likely to run into today. Okay, so what are we looking at here? Where are you? There we go. Sorry, the screen's coming up. It's my laptop's just pretty slow. You know what? Let's get rid of bookmap, free up some GPU cycles. Okay, so what are we looking at for today? Sorry, I'm not trying to stall here. It's just really laggy right now. Whiteboard, green. All right, so we're right here. We've shifted the point of control up. We have the point of control with the current price. To me, this looks like an open auction out of range, pullback into the 58 area, potentially lower into the 52 area. Remember the 52 from the other day. This is the SOC tested multiple times in the overnight session, tested yesterday. Pull back to the 52 area, look for an impulse higher, squeeze into the 81 single prints, and then start to move towards the century figure before we see a response. The big the big level to retest for balance is, of course, the point of control from the other day at 35.99 or so. That's the primary scenario right there. It's a push towards the upper distribution of Monday and the resumption of this auction up here. Secondary is a failure of that open auction, pushes above, squeezes into this 81 area, consolidates, then impulses down back into the range, and then starts working itself back into the prior day's point of control, which is 35.40 below. So it's got a lot to work through here. It's got 58 to work through. 58 and 46, 42 beyond that, and so on, and back into the point of control of the prior day. This sets us up for a higher high, higher low, but which kind of starts a one-time framing up, but it's weakish. The market is likely to need to base a little bit more at lower prices to catapult higher. This is what I'm looking at for today. A failure to hold the point of control is likely to squeeze us down into the 35.05 again, and then potentially lower. But this is not expected. I am expecting it to kind of hold this area here and start to move higher. Remember, the overall picture geopolitically, the overall picture is less hazy for the market. It's clear who the next president of the U.S. is, despite contests to the contrary or disputes to the contrary. Even with these legal challenges, the analysts say that even if he wins these legal challenges, he cannot overcome the fact that the counts are too far apart. I believe the popular vote is wider than 5 million votes. We don't elect people based on a popular vote, but it's going to be very, very hard to mount a challenge here. And so that's one big uncertainty for the market that we've been dealing with for some time. That's kind of phasing away. The second one is, of course, the COVID vaccine. Knowing that, hey, this is not an endless thing. There's a solution in the horizon with a 90% success rate. This could put the market to rest, and this is what's likely pushed the small caps into new all-time high territories, into new territory. The Russell's trading in a 1700 handle. So this is likely to continue higher. So we'll see how that plays out. The fact is, with uncertainty, the market holds on to cash or safety. With more certainty, the market is likely to allocate to risk. And this is why, again, the comments on politics is not to ruffle anybody's feathers. Everybody's so goddamn sensitive about their politician. But it's to say there's less uncertainty and therefore more allocation to risk over time. Okay? So take that for what it's worth. Good luck, and I'll catch you tomorrow. Take care.